This is a video of epic proportions. I need to get into first what's happening in China right now. The stock market is in focus. The second thing I want to look at is the Federal Reserve selling all of their corporate bonds. This is big news. And the third thing is the inflation stimulation. I'm going to be showing you what's been happening, and it is quite intense. If you stay to the end of the video, I'm going to give you 5 tips related to the stock market, so you don't want to miss that. All of that and more. Let's go. Okay, so let's start. Hang Seng Index drops nearly 4% as Evergrande shares plunge 17%. Other property stocks fall. By the time you're watching this video, it could be a different scenario, but the point here is that fear has taken hold. Evergrande's got a lot of news coming out this week. We're going to be finding out, and of course, I will bring that to you. I don't want to go into it in too much depth in this video. I've been covering it in the previous videos, so of course, I just wanted to give you a little bit of an update here. The Hang Seng Properties Index declined nearly 7%, dropping to a 52-week low. In fact, if you look at the property index, it has dropped to a low in which we haven't seen these numbers since 2016, all right? Now look at the Hang Seng Index itself, going back to levels we haven't seen since late 2020. In fact, if I forward over to the actual Evergrande stock, you could see what's been happening, and it is not looking good. This is the 1 hour candles, just basically trying to give you a breakdown of what's been happening in this particular trading session. It's weak, and weak. This is just one particular stock, but it is the focus of what's happening right now because of everything that's been going on. I highlighted in the previous video talking about Michael Burry and what he had to say. Interesting enough, by the way, his Twitter is back on. He likes to delete it and he likes to bring it back, but right now it's back up. He actually, and I haven't seen this before, he reiterated the point. He said, one more time, read thread. If you haven't seen that video that I did, you must watch it. It's the previous video. I will link to it at the end of this one, talking about Evergrande, talking about China. He wants people specifically to read that thread to know about it. If you haven't seen it already, check the video at the end of this one. But another thing I wanted to mention was this. Cute timing for an ethics outcry to force the Fed governors to sell stocks. Too cute by half. And of course, this has been happening, right? You saw this right at this moment right now, but that's not the only thing that's been happening. I'll get to that more in just a second. He also mentioned this regarding inflation. So, Federal Reserve, are you lying to us or are you lying to us? Here's the quote really quickly. Mr. Powell used a gauge from the Dallas Fed that throws out the top 31% and the bottom 24% of the personal consumption expenditure price changes and was bang on the Fed's 2-year target. The 2%, year over year. You know how they love that 2%, right? Also, at the bottom, he says this. The Cleveland Fed strips out the top and the bottom 16% of the consumer price index changes and was far higher. Worse, the monthly rate was unchanged from August to July, giving no support to the idea that inflation has already come back down. This is something that we need to talk about, okay? They manipulate the statistics, as you see, but also at the same time, there is no temporary inflation, at least not at this time. We don't see that at all. And I'll show you some indicators around that as well. Big news though, Goldman Sachs released this, and it's coming from the Federal Reserve anyway, but they put the chart together. The Fed sold off its entire SMCCF portfolio all over the summer. What's that? That's when they went in and started buying up all of those corporate bonds from companies like Apple. They sold off. Now, they didn't create a firestorm by doing this. Just like Kaplan and Rosengren selling their shares didn't create that as well, okay? But what does it signal to the markets? What does it signal? So you got the ETFs, you got the bonds right here, and they emptied out their portfolio. You can see, after reaching a peak market value of $14 billion in December, the facilities have fully liquidated right there. That's it. Gone. the Federal Reserve is no longer bailing out these companies directly by buying their bonds, by buying the corporate debt. They're not doing that, at least through these channels. And I wanted to make that very clear right now. So there are these two things happening simultaneously. Rosengren and Kaplan and all these others, you see them, they got the ethics concerns. They're going to sell off. Okay, fine. At the same time, you've got the Federal Reserve pulling out support entirely from the corporate bonds. Is this timed intentionally? Who knows? July brought about this year's first month of foreign net selling of US dollar corporate credit. Is that also an indication that, hey, the Federal Reserve's pulling out support, so maybe the foreigners, investors seeing that, doing the same thing? Could that be the issue here? What does it all mean? Let's break this down a little bit further in the Money GPS Insights. The markets are beginning to worry about the contagion in Hong Kong, and you could see the reaction from that directly right here. Fed members have sold their stocks as well. At the same time, you have the Fed itself selling off those corporate bonds. Investors, quite frankly, they are unprepared for any event, and they must reassess their portfolio, the allocation, and everything to do with it. They must be ready for any potential pitfalls. And that brings me to this. Your favorite and mine, Janet Yellen, renews calls to raise the debt limit to avoid catastrophe. That's right, Congress, you better do your job and raise that debt ceiling. And another thing you gotta do, of course, is hit that thumbs up button if you want to support the channel. Thank you for that. The taper that will really bite into the US growth isn't the Feds. And what are they talking about here? They are talking about the spending coming from the government, the fiscal spending. That's right. They want to be able to get in there and pump it up, because that stimulus, whether it's coming through the form of stimulus checks, whether it's coming from the form of any one of these packages that they put together, that needs to happen, particularly, as they mentioned here, the Federal Reserve winding back their support. People are saying the Federal Reserve will never taper. In many cases, actually, they have started to do so. They pulled back the support on the corporate bonds. They already increased to a degree, different rates within that system. Their interest rate, the Fed funds rate, is still at a record low. They're still printing up money. But certain things have changed, and the tightening has begun on a global scale as well. That brings me to this. Economically, you've got a different issue going on than the stock markets and so on, but they are connected in a way. You're seeing the LA, Long Beach ports to test expanded night and weekend hours. Imagine having to do 24/7 shift to try and mitigate some of the insanity that's being seen right here, right now. The port is absolutely jammed. I don't know if they mentioned in this article right here, last time I think it was 61 ships off the coast, and that's a record, of course. I don't see it right here, right now, but that's the case. And then you've got this. Inflation, at least for now, is not temporary, doesn't seem to be stopping. You can see this in virtually every commodity. Some have, come off their highs, certainly, particularly lumber. And, you do see fluctuations all the time, but the general trend is up, at least for now. Used car prices on the rise, raising inflationary specter. So you can see the previously owned vehicle index rising throughout mid-September. I had shown you this before. This is the Manheim Used Vehicle Value Index. And you can see, from 2020 and on, this has gone up considerably. But if I zoom in, I might be able to give you a little look at that. So I showed you the last data point. It had come down from this point here, and now it had risen up. I try to give you those updates so that you're aware, so that you're not thinking, oh, the prices are starting to come down now. No. Now they're coming back up. It's crazy. It really is. If you want to see this, I will leave the link in the description, just showing you the Used Vehicle Value Index. You can click through that if you want to take a look, okay? And then you've got this. Suburbs take center stage as the US growth slows. Census data reveals the 10 fastest growing large cities in the US are all suburbs, if you can believe it or not. And what's happening here? People want the extra space. They need an office to work from home. They want, a little bit more area for them and not to be stuck inside of a condo, not to be in a little tiny house. They want something a little bigger, and that's happening. That trend is still right now, as of right now, continuing. So you stay to the end of the video, okay? Now we're going to talk about the 5 tips. This is the 5 tips to know the direction of stocks. This is general information, okay? It doesn't necessarily apply to today or tomorrow or last year. This is the general information. I'll just talk about it very quickly. I'm going to try and get you access to all of these PDFs soon in the coming weeks, the coming months. Every single video will end in tips so that you can be informed as well as have some actionable steps. Stock buybacks. A company can use their revenue on research and development, capital expenditure, dividends, and share repurchases. Since 2009, share repurchases, that's the number one buyer of those stocks. This right here is the primary factor for a stock's performance. There's no question about it, okay? I'm talking about an individual stock's performance. The market as a whole, different story. Interest rates. Interest rates are the primary factor in the direction of markets under normal conditions. And today is anything but normal. Reducing rates usually brings stocks up. Eventually, though, the stimulative effect starts to wane off, just like an alcoholic. One shot just isn't enough anymore, right? Central banks use open market operations, that's printing money, in order to set interest rates. It's not just a key that they enter into their computers. Lower rates encourage a misallocation of capital. Then you've got, of course, money printing. This is not necessarily printing money and buying bonds pushes the stock market up. No, but it encourages risk, okay? Risk taking, very important there. Moving averages are really key because you see the price. Is the price of Berkshire Hathaway stock an indication of the performance of the company? If it's at $300,000, does that mean it's better than a company that's at $20? No, but if you compare that to the moving averages, that gives you some insight. It gives you a little bit of history there, and you could see it kind of smoothed out. So you're not necessarily, all over the place with it. Moving average is very key. You can use a 20-day moving average if you're a short-term trader, or a 50, 100, or 200-day moving average, as most investors do. And of course, you want to avoid. This happens to be the signals that you're getting from the investment analysts, all these different companies out there, because they can't give sell signals. They just can't. Okay, that's just the way it is. If you want to be, the one to accept money from these businesses, you can't say anything negative. That's the way it is. That's the way that, CNBC and Bloomberg and all this stuff, they want you to buy, and they don't want to tell you necessarily the truth when it comes down to it. Anyway, if you appreciated that, give me that thumbs up. Give me that like button. Thank you very much. If you want to be an insider, this is the place I'm going to be able to give you those PDFs and give you all the knowledge. I've written 4 so far. I will continue to bring out more. All right. If you want to get that, it is for free here at this card or at themoneygps.com. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.